What's going on, everyone? It's Maximus Trades back with another video. I know it's been a while, but I'm finally back, and today I'll be going over my new Asia session trading strategy, my new trading model on Asia session. So obviously over the past couple months, it's been now. I've been going through some personal things, but it's been pretty difficult to trade. But I'm back on my shit now. Today I'll be going over this Asia model, which as you can see, just on this session has a 100% win rate. It's pretty good, as around 70 to 80% win rate with our average reward to risk around 1 to 1.2. So today I'll be going over my model, what it is, how it works, going over some live examples on the chart, and then from there we'll see where it goes. So maybe one or two live trades on this session. So obviously I want to just clarify, it does not have a 100% win rate. I don't think any strategy in the world has a 100% win rate. Like, it's not like just this session so far. We're around almost halfway into the month, and I haven't lost a single trade with this strategy, which kind of shows you how efficient it is. So yeah, without further ado, let's just hop in and the live charts and start breaking down the strategy. So first off, this is a continuation model. So if you guys remember when I was trading New York, which is the model, like when I used to trade New York, I used to trade a different model, and that's what got me funded. I still do time to time, but now because of school and stuff, I have to trade after. I can't really trade during school, so I have to trade Asia, which is why I kind of I don't want to say leave, but I'm just not trading that model anymore. But that model was a reversal model, but this model is a continuation model, so they're kind of like opposites, and you'll see more why. So the first thing I want to do with this model is identify my daily buys, and this is something I did not really do with my New York session, like with my New York model. Sorry. So like for a New York model, I was kind of going into market open with I wanted to see what the market would do, and I would react off that. But this is I'm kind of being a lot more strict. I want to see the market do what I want. Like I'm kind of going with that discretion that I think this is gonna happen, and I want to play to that. So that's a major difference there between my old model and this model. Is like I'm going with a daily bias, and the way we do this is by identifying high time frame unfilled FEGs or untaken key highs or lows. So this is essentially the way we get my daily bias. So I look at the high time frame, so 4 hour, 1 hour. I want to see, okay, any unfilled gaps were attracted to any pools of liquidity, which are essentially untaken key highs or lows, right? So after I do that, I get my daily bias, whatever. Second thing I want to do is I want to identify a reaction off a fair value gap in my direction. So identify a reaction off a low time frame FEG in my bias direction. So the way this works is essentially that's pretty much it. Identify reaction off my low time frame fair value gap, and I just target my bias range, which I'll explain what that is. I target my bias range, and yeah, and I just want to say, it's really kind of confusing. So I might just put other confluences, because I just don't use fair value gaps, but other confluences. So basically, the way this works is I identify in the high time frames my bias. So say there's a 4 hour unfilled gap or something like that. Let me just show you. I know it seems like a little confusing right now, and it is pretty confusing, but when I let me just show you what I mean on the live chart. So I'm putting this down here. So let's go to Asia session, so around 7 p.m. Eastern. So right now, so here we have, okay, the 4 hours. So normally, being chill, thing right here. But now, where's the writing? So I'm putting this up here, right? So now let me go to the 1 hour. Boom. So I see this 1 hour gap I want to identify, right? Hopefully this gap on 30 minute. Yeah, okay, so see, I have this 30-minute unfilled fair value gap. So a 30-minute bearish unfilled fair value gap. So what this means is this fair value gap has not been taken, and it's a big one too in the 30 minutes. That's a high time frame, right? So my thinking is price may want to be bullish and come up and take out this unfiltered value gap. So I might go in with that bullish consensus, right? And I'm looking a little closer here, I can see that we have come down and swept out this hourly low, right? We've swept out this low, so that kind of gives you that bullish bias coming into the day. So first off, we have this unfilled 30-minute gap, and we have this sweep of this low, right? So all I'm really trying to do now is I have my bias. I just go down to the lower time frames, like 5-minute, whatever. It's kind of laggy. I don't know why, but I can go down to the 5-minute, and I just want to check out like. I have a 5-minute unfilled gap, so I'm going to be bullish, take out this gap, right? So it's kind of gravitating around these my whole model gravitates around these unfilled gaps. So now that I have, my daily bias looking for longs or whatever, and I have my, I'm just waiting, and I have my kind of idea to why that is. I'm just going to go ahead and wait for a reaction off a low time frame fair value gap. So I'm talking about the 1-minute or the 5-minute. So as I was saying, since I already have my bullish bias, all I'm really going to look for is a low time frame reaction off that gap. So where I said other confluence, this is where it plays in. Like if I come down here and I see, okay, look, working for longs, right? If I see a bullish SMT or something right here, so we did not take out this low in the 5-minute, but I found the S&P, did we? We did not either, right? But say we do on Nasdaq, say like, let me just go on the 1-minute right here, wait. 5-minute right here, right? Yeah. So okay, like right there, we've taken out this low on the Nasdaq, but on the S&P, we have not, right? So right there's another confluence to add to that bullishness. So I'm still saying, okay, I have SMT2, so now I'm just gonna wait for a 1-minute displacement off a bullish gap, and I'll probably take it up to like these highs, right? So let's just wait. Placement down, positive. Okay, so I come down, make a 1-minute fair value gap that gets absolutely nuked through, make another there's another 1-minute fair value gap here. Hopefully it gets respected. This gap here. So we see, as you can see, we respect it here, but again, we are still on this 5-minute SMT, but there's still this 1-minute gap I don't enjoy being there, so I'm not gonna enter just yet. I want to see. Let's see, then that's exactly how I didn't enter because we had that negative displacement off the gap. So I'm still waiting for that 1-minute bullish fair value gap to be respected and tested, like just like that. So now I'll just probably put a limit order just above this candle close. And normally what I do, I didn't write that down, but I always go break even at some key internal highs. So I'm probably go here, stop loss below here, and I'm gonna go break even as soon as we cross this internal high. So these internal highs up here, because it seems like a key level for liquidity or whatever. So I'm just gonna go break even. So a lot of times on these trades, you're gonna have break even trades, and that's just something you have to deal with. Asia session is really unpredictable. So literally, as soon as we enter, if we get into any type of profit, I'm probably gonna break even here, just because of how dangerous these. I just don't want it to reverse down to. Oh, my stop loss so low, I can't lie. I just don't want to reverse down, so I'm gonna go break even at this internal high, which is something I always do. Break even at the internal high. I didn't think we're in yet. There we go. We're in. 2 candles in. There we go. And break even. And probably I'm gonna check out the higher time frames. If we're like a gap, we're in the middle of a gap. So that midpoint of the gap, probably gonna take 50% off. You always want to take off good partials off. So we'll count that as a win. That's one winning trade right there. Took partials for like $300. This is a 100K account. Yeah, we're up like 8.8K. So calm. Probably gonna wait for it to go up a little more and then maybe take some more partials out. So you see, we're kind of get stuck up. We're kind of getting stuck up by this gap here. It's kind of annoying. So if we kind of get a reversal, I'll take off 50% more. Yeah, I'm gonna take off 50% more here. Even though it took us $100, everything so counts. Whatever. So looks like we got stopped out at break even. So I think we made like 450, 500. I want to say from the trade. So anyway, we're up 8.9K, so really close to 9 bands. So that's a good example of this trade. So obviously, this is an example of the model. Obviously, we didn't have full TP. We took partials twice, and we went break even. So it just shows you like Asia a lot of people don't like Asia session because it's unpredictable. It's really volatile. It doesn't, your trades often don't hit full take profit, but that's fine. You just have to adapt and adjust it, which is exactly what I've done with this model. So again, it seems really simple, and it is. Like, I mean, it seems complicated. It might seem complicated at first, but in reality, it's really simple. You're just finding your daily bias, and you're gravitating around unfiltered rally gaps. You're just waiting for a simple reaction. It can literally be a 1-minute bullish rally gap, like we just saw. A simple reaction, we entered off that, or maybe another confluence, like a 5-minute SMT, which helped us in that example right there. And we just target my bias range. So bias range, essentially, here's what it means. So if I have this 30-minute gap here, unfilled gap, my bias range. So again, I'm saying longs because this gap is not filled yet, right? That's the main thing. From here, I'm saying longs because the gap is not filled. Okay, my bias range is something I just made. Like I just thought of it. I don't know. It's not really a professional term. Don't quote me on this or whatever. But my bias range would be from where I'm at right now to where my unfilled gap is. When I'm past it, when I hit this unfilled gap, my bias, I'm not bullish because obviously I'm at a 30-minute bearish gap. I'm bearish. I'm bearish at that point. But from here to here, like from this, let me just draw it out. Where's the drawing out tool? From like, wait, whatever. I can't fucking find it. Yeah, I found it. So from here to here, this point here, from this range, you see what I mean? From here to here, I am bullish. So in theorem, I could enter here and target all of this, and it probably will work. Like we'll see on the 1 minute here. Like I could have just gone up and targeted all of that, but more likely it might happen, it might not, but more likely it's more efficient to target less because you're in turn making more profit. Because if I have to wait to get it all the way up here, my profit will be short. You know what I mean? If I'm risking the same amount targeting these highs or like this fair value gap, then targeting this, my profit will be much lower when I'm at here. When I'm sorry, that's confusing. Let me think about it. Let me make it simple. So if I'm risking the same amount of money to target these highs, and I'm risking the same amount to target these highs, obviously when I'm say at this point in my trade, so if say I enter here, whatever, I'm targeting these highs, right? Obviously at this point in my trade, I'll be up a lot more money than when I'm targeting this gap up here, right? You know what I mean? Say like this is for I'm risking $1,000 to go exactly what I was doing. At this point in my trade, if I'm looking at this trade, I'm up a lot more than if I'm looking at whatever this trade. I'll be up a lot less, right? So keeping in mind Asia session, how volatile it is and how easy it is to get stopped at a break even, it makes sense for me to target these smaller moves because I'll capitalize more profit. And say in turn reversal does happen, I can take partials out for more. So in turn, it's just maximizing profit. So that's my bias ranges. Like I'm just basically just the point for where I kind of hold my bias. And then yeah, like this strategy may seem complicated at first, but it's really simple. It's just unfilled gaps and fair value gaps. That's all it is. You're just targeting longs, and you have to. The main thing with this is going break even at your internal high, being disciplined with that as well, taking partials when you need to, not being greedy. But apart from that, this strategy is really simple, and it helped me. As you can still see, I took a live trade right there. I still have that 100% win rate. Right, we're up 9% halfway through the month, which is really good. We're up almost 9K, so it's good. It looks really good. The strategy looks good. So if you guys like this, like, subscribe. Might want to try backtesting on your own. Again, not financial advice, just sharing out my thoughts and opinions with the trading community. But anyway, that's enough for today. It finally feels good to be back, and I'll probably start posting, more consistently over the next couple of weeks. But anyway, that's my trades out.